Hello traders, Gary Wagner here at just about 12:30 in Honolulu, 6:30 in New York. It is Friday. Happy Aloha Friday, as we say on the island. It is September 11th, 2020, and this is the Daily Report for Gold and Silver, our weekend review. Today, the U.S. Treasury announced that the budget deficit has swelled to over $3 trillion. That is the largest in history. The only thing coming close to that was in 2009 when we had a budget deficit of $1.4 trillion. Comparing the deficit this year to last year, which was under a trillion, I believe 934 billion, you can see the effect of the pandemic in terms of expenditures for the CARES Act. On today's report, we'll review our current trade, talk about different support and resistance levels, and tell you what we believe we will see next week, because all eyes will be focused upon the FOMC meeting. Let's take a look at current pricing. Even with slight dollar weakness today, we did see both gold and silver close moderately lower. Currently, December futures is at $1948.10, showing a net decline of about $16. It is still above our entry price of the trade that we entered last week. When we look at silver, that lost 1.34% at $26.92. That's a net decline of about 37 cents on the day. And as you can see, the dollar was in essence neutral, down 0.011%, currently fixed at 93.32. We did have both the Standard & Poor's close higher, along with the Dow Jones Industrial Average, as well as the NASDAQ Composite. Let's take a look at our current charts. As far as gold is concerned, the dollar giveth and the dollar taketh away. We are looking at a line chart representing closing prices on a 2-week basis of gold futures up on the top and the dollar index on the bottom. And what is most noteworthy is you can see this recent decline in gold, this downtick here, corresponds pretty effectively with this uptick in the U.S. dollar. Dollar has absolutely been gaining strength over the last couple of weeks. However, that being said, we still see that gold is defined by a fairly wide trading range that includes $2,000 on the top and about $1,920 on the bottom. All week we have been talking about this major shift that occurred recently after hitting the record high this year, which is the new all-time record, and then trading back down to about 1875, is that there is very, very strong support on a technical basis, roughly at 1920, and exceedingly strong resistance right at around 2000. So in terms of the levels that we are currently looking at, there are a couple that are of key importance. We have, first of all, the most minor level, which comes in roughly at 1980, and it represents the highs that we saw yesterday. But really, the big number we have to see taken out if we're going to see gold move to new records is going to be 2000. It has only done that on a couple of occasions, and at least since the middle of August, we have seen that that number has proved to be a level of resistance that gold pricing has not been able to exceed. And traders, when we convert our daily chart into a weekly chart, there's a couple things that become apparent. First of all, even with today's decline, we did see gold gain on the week. That's why we're looking at a small green candle. But what is more obvious to me is the series of higher lows and lower highs that really have been coming into the market since the beginning of August, when we reached a new all-time high at 2088. We're absolutely approaching some sort of apex of this pennant formation, and we could easily see a break next week when the Federal Reserve convenes for the September FOMC meeting. And traders, this chart that we are looking at is a daily chart, continuous contract of gold, and we have our three basic moving averages that we've entered: 50-day, 100, and 200-day. And what we're looking to ascertain is whether the market is overbought, oversold, or neutral. And one of the ways that we do that is we look to see whether or not the averages themselves are widening or narrowing in terms of the differential between the two price points. We can certainly see, just looking at these moving averages, that they are in fact widening, and that bodes to the bullish side of the equation. Of course, the other way to do it is to look at the MACD, the moving average convergence divergence, which I have just put up. And what we can see is that we were in overbought territory, but that was some time ago. You can see that right up here where they cross. But since that point, we have seen this move dramatically lower, and now is really going to oversold territory, which means that we could expect to see the market rise next week. My recommendation is to maintain our current long positions in both gold and silver. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you next week for the next daily update and review. Bye-bye.